Hi, everybody, and welcome back to our second segment today. And we have invited Jeremy Radcliffe to come back on the show with us and kind of give us an update in the financial world. Jeremy's with SWBC Mortgage and is one of our lending partners. And just, Jeremy, welcome to the show.
Great. Can you guys hear me okay?
We can hear you.
Excellent. Great. Perfect. Well, good to connect with you guys. I was interesting hearing about some of the stuff happening over the weekend for y'all. I can't imagine a squatter in a house.
What did you do this weekend?
We actually just got back from, it's kind of as a sad story, yet a good story. My parents celebrated their 50th anniversary this last year. We were supposed to go to Alaska, but you can imagine that got canceled. So instead, we all quarantined the last couple of weeks, and then we met up in Destin, Florida. So it was great. We got a big house, beach. It was wonderful.
That's
great.
Really
great trip.
I'm so glad you got to do that.
Yeah, we did. It was great getting to, I haven't seen all of my brothers and kids, and our kids had a great time. So we had a really great trip. And Destin right now is gorgeous.
I'll bet.
It's beautiful.
So what's going on in the financial world?
Gosh, you know what? I feel like every time I chat with you guys, I think I'm going to run out of news to share, but it just keeps happening. So I just read a couple of headlines stating that the Mortgage Bankers Association expecting mortgage lending to be at a 14-year high right now. And a lot of that's just driven by the lower interest rates. So we're seeing rates are now all over again. They are at all-time lows. So I won't say the exact details, but I was able to lock a 30-year under in the twos this last week, which is just incredible.
For 30 years?
Yeah. Isn't that amazing? So obviously there's dynamics to all of that. So, but yeah, I mean, it's just, we're kind of now at this all-time new, and the outlook, and a lot of it's just being driven by what's going on with COVID. The outlook is that rates are going to continue to stay low. So what we're seeing, at least on our side, refinances are still really big. We've seen a lot of purchases. I think it's maybe slowed down a little bit as a result of the holiday, which seems pretty normal. But I think people are getting back in to start looking again. And I don't know how much lower they could go. I mean, we're not complaining, but I'll tell you, mortgage lenders as a whole are trying to manage the volume. Yeah. It's just so much volume that it's causing, it's delaying some of the processes. Not that closings are getting delayed, but what's happening, at least on our term, we're prioritizing purchases, but we basically had to tell our refinance clients, like, hey, we promise we will get you closed. We just won't have a close date until we know where we can get you put in. So, but volume is definitely a big issue right now for lenders.
How has the COVID changed, like, lending guidelines and
So one of the big issues that's come up recently is, so two things. Anybody that's been furloughed from their current job, that's been an issue. I think we talked about that. If you've been furloughed, or you had a position and now you've either been temporarily furloughed or maybe even lost their jobs, we've run into that where that's prevented people from being able to close on their homes. That's obviously a factor. The other factor that we're seeing really come into play right now is for people who are self-employed. So Fannie and Freddie together, they came out with different guidelines, but they said, hey, wherever Fannie's saying one thing and Freddie's saying the other, we're basically all on the same page. So interpret it as the same. But what we're having to do for self-employed borrowers, and that's people who either have their own businesses, they're having to take that information. We're just having to get a lot more granular. So we're now having to look at business bank statements for the last 2 months. We're having to get profit and loss statements. Clients are having to write up just a quick narrative explaining how has COVID-19 affected your business. And it's really, it's made it a little bit harder for me and what we do, because we try to do a really in-depth approval on that. In some cases, it's really it becomes an underwriter's discretion to figure out, hey, what has happened to someone's income as a result of COVID-19? Does that make sense?
Yeah,
so
it does.
That's a really big issue. And I don't know if that's going to change. And because what's happened right now, if you think about it, taxes, 2019 taxes were delayed until this next week. So you could have people who are qualifying off of their 2018 tax returns, which was I mean, you're almost 24 months from when that was filed, or a year and a half. And so what they're having to do is just verify, hey, where's the income look right now if you're self-employed? So
Interesting.
that's a big factor. Yeah.
What is have you seen an impact of the forbearance that was built into the first stimulus package?
So forbearance has, we've been getting consistent updates on kind of what that looks like or how we're supposed to manage that. If you had someone who was in forbearance, they basically have to be caught up. And that was one of the things that was, it was a ready, fire, aim. If you ask most lenders how CFPB handled that whole thing, because it put a lot of pressure on lenders to try to figure out how are they supposed to handle these updates, because lenders were still responsible for making those payments to the investors, to the GSEs. And so what's happened on the forbearance side is they've created guidelines along with, I think one good benefit has been that there's been some clarity on, does that lump sum forbearance amount have to be paid back in 180 days or 360 days? I think they've created some clarity on that for clients, which has probably been really needed. But on the actual lending guidelines, it still comes down there. We've got so many different metrics on where people fit and that whole process. So what I would recommend people who are considering forbearance is, because I know this is happening, because I've talked to people who said, hey, I'm thinking about just claiming forbearance. Not that I really need it, but I like the cash flow. I would highly recommend people don't do that, because in some cases, even though it's not supposed to report negatively on your credit report,
Interesting.
we've seen situations where that is still reporting, and it just has to be updated. So does that help?
If you so the guidelines that you were talking about on the repayment, the clarity that you'll finally have on that, what are
So
those?
it's my understanding now that what we've been told to communicate with clients is always called servicing, because there's you have to go through a process and figure out exactly what the situation is. But it's my understanding now that those amounts could be tacked on at the end of the term. But the tricky thing on that, though, is you can't refinance. If someone's in forbearance, that amount has to be brought back to normal. Does that make sense?
Yeah.
So that's where it's creating an issue for people. If they're just saying, hey, we're going into forbearance, we want to just avoid payments for the next 6 months, that amount would have to be brought back up to current in order to refinance if you were trying to do that.
Interesting.
Yep.
What are you? We've heard of some lenders that are actually calling, or the closing department is calling the employers to make sure that they're still employed as of the day of closing.
So that is a question, Jeff, and that's been a big issue we actually had to hire a whole new team to basically, because the investors have said, hey, you need to verify that someone's still employed, because if you have someone were to be basically, if they were to claim forbearance between the time that the loan was originated and when it was sold to the investor, it creates an unsellable loan. And so now what we've had to do is say, even up to, some investors say within 10 days, I had one the other day, it was within 5 days, and from the note date, we had to verify that they were actually still employed. So what we've done is we've tried to automate as much of that as possible. There's verification services like Work Number. We can get updated pay stubs. It's just extra steps, because I don't think anyone's trying to kind of work the system necessarily. We just have to verify that someone's income hasn't changed last minute. So
Interesting times.
Hey, Jeremy,
it's very interesting. So,
with buyers right now, we've had some of them trying to get into certain school districts as of recently, even though we don't know if we're going to be back at school. With what it sounds like you're going through and all of the extra steps, do you still see 30 days as doable from your end?
Yeah, so we're still closing purchases in some cases 20 to 30 days. I think I mentioned we're just prioritizing the purchase business.
Okay.
We never want to be the cause for someone to not be able to get a home. The main thing on that, though, Weston, is making sure, and this is where we've talked about this, just having a good, clean pre-approval on the front end always helps, because then we know how to approach hey, what are we going to need? Like, is this a self-employed borrower? If that's the case, depending on how motivated they are,
Right.
and if they're able to get us those updated P&Ls and bank statements, and they're willing to do some of those extra steps, we can still do it. Refinances, we're recommending, a little bit longer timeframes because we're working within the purchase side. But I think, if we've got an opportunity to get someone closed and get them in the right house, and they're willing to help us out and get, we can move forward pretty quickly on stuff, we can still do it in less than 30 days.
It's interesting that one of the things that we like about working with you is that you do put people into that approval process right away. I mean, the minute
Right.
they call you, they need to start
Right.
filling out the application. And it's a very, the consumer reaction has varied from, oh, this is great, to people who went through the home buying process maybe 10 years ago. And,
Right.
it used to be, well, you'd pull their credit and you'd write their letter and then you'd,
Right.
and now,
it's probably, I imagine some lenders do it a little bit differently than I am. I just think specific, because I try to be I think about what I would want, and you get so far down the line, you get emotionally invested on a property. Let's make sure that the agents that are involved in the process and the clients that are getting excited about the property they're looking to buy, let's make sure they can actually afford it and qualify for it.
Yeah.
And there are some weird nuances. And right now, technology, the way we have it today, it allows us to expedite that process. So it's really not that much more complicated. It just maybe can't catch some people off guard a little bit if they're thinking that they're going to wait to do the approval process until they're out of option. We try to set the right expectations on the front end and say, we've got to run these two processes in parallel to make sure that we're going to hit these deadlines on time. And everyone seems to really be on board with that. So
the ones that seem to be more shocked about the process now are the ones that bought their last home in 2007, 2008.
Oh, and yes, it is. If you have not done financing in a while, because they missed that whole 2008, 2009 fiasco when lending swung so far, and we've kind of come back in some ways. But I think I'm really proud. I'll just say I'm really proud of our industry. I'm particularly really proud of what we're doing as a company. Just handling everything that's been going on. And I think we're still trying to take it and say, we want to help people get into homes. We want to communicate really well throughout the process and just avoid some of those gotchas. And that's whereas our team, let's do as much as we can on the front end to make sure everything's covered. So.
Well, before we wrap up, I would say that firsthand experience, I just closed with Jeremy 3 weeks ago, I think. And it went seamless. And at one point, I think that it was me, I'm pretty sure it was me, that was dragging and not getting stuff done per Jeff.
It may have been you a little bit, Weston.
He literally looked at me and he goes, you are not going to be the worst client that we have. Now get that filled out. And I was like, I forgot. Oh, sorry. But
that's why we have Jeff involved.
Oh, yes. But I will have to say
I appreciate that.
Carly and Kimberly and you yourself, y'all were always there and answered every question. And I think that it went super smooth, and we love the new systems that are in place, and it made it so much easier getting that loan done.
Yeah, I would just say, I know what I would communicate to your viewers, and I just so appreciate you guys. I mentioned this, what I think is so unique about you two is that you guys, when you go out and you work with clients, somehow you're able to get deals that other agents, I work with lots of different agents, so this is not a carte blanche statement, but you guys can get deals under contract quickly, and I love that about y'all. And we've talked about that a little bit, and I think that's a unique gift for you guys, and the way that you're able to negotiate and get to that next step. So that's a really big win for you all, and I appreciate the opportunity to always just really honored to get to work with you guys.
Than't you very much. We appreciate that.
We feel the same.
You bet.
Well, Jeremy, thanks for coming on the show again.
Absolutely,
we'll have you
guys.
back
Great
on
to
in a
see
couple
y'all.
of
Hopefully we
months.
can all, gosh, I'd love to happy hour sometime. I don't know how
No
it'll ever
kidding.
work, but,
It may have to be 6 to 8 feet apart and going like this, but
yeah, it's a unique time, but everybody stay safe, and let us know if we can help with anything.
we'll do it. Thank you again, Jeremy. So Jeremy's contact
You bet.
information is
You
going to
guys take
come up on the screen here, and if you are in the market for a refinance or purchasing a home, reach out to Jeremy. The process they have really is pretty cool.
Yep, and it is firsthand experience. It is seamless white glove. So take advantage of our recommendation and get in touch with Jeremy.
So we hope you've enjoyed our show today, and if there are any topics or any guests that you'd like to have us have on, please write in the comments down there. We'll reach out and see if we can make that happen. And join us next week.
Yep. And remember, we want to be your realtors for life.